Hello, this is Mark, and this is the update for the week of March 23rd from the ETF Investing Advisor. Just as a quick reminder, if you're not already taking the 15-day trial, you can do that. There's no obligation, no payment, no requirements. So just go to etfinvestingadvisor.com, click on the start the 15-day trial, and you are off to the races. So what I wanted to do in this video is I wanted to talk about one of the specific things that we track at the ETF Investing Advisor. So let's go ahead and log in and take a look. Okay, so when you log in, you're going to have access to several different tools, and perhaps one of the most popular, of course, is the heat map, and everything is explained inside of the dashboard. So when you take your trial, you'll have access to everything here. But one of my favorite ones to look at is the asset classes, and I'm going to show you why. And this is going to give us a really tremendous indication of what's happening in various different asset classes, and the best way to do that is really just go through and discuss what we're expecting in the week upcoming. Now, there is quite a bit of data that you can see here, and obviously we don't have time in this video to go through what each of these different scores and ratings are, and we'll save that for another time. But what I wanted to point you to is we try to make this really easy, and the bottom line is tell you that you're looking for all green as far as a sector or a market or an ETF that you should be interested in or at the time currently owning. And everything that is not completely green definitely should be avoided. So taking a look, for instance, at the global equity regions, you can see, probably no surprise if you're familiar where the markets are right now, that the broad market US is green. Now, it's not solid dark green. It's a dark green and a lighter green, and we get into this in our instructions, but this is still a place where capital can be. This is not anything about day trading. We're trying to look to hold a position. However, we definitely do not want to hold any of the ETFs that suddenly turn neutral or even negative. For instance, if we were holding something right now with emerging markets, we really need to be out of that. And you can see on down where the real weakness is. The weakest ETF that we track is the Latin America ETF. Now let's go down to country equity indices. And what's interesting here is that China large cap really is the only one that's solid green. That's definitely been the strongest, and that's FXI in case you're interested in the symbol there. And then you can see we have a little bit of mixed settings here, and mixed results I should say. And then we go back into some that are green here, so the Netherlands and India. And then everything else is actually fairly neutral to negative. So that should tell you something about what's happening on the global markets. Now let's look at size and style. My strongest right now, it's got a rating of 1 and it's double green, is the Vanguard Mid Cap Growth ETF. So VOT is definitely one to look at. You can see other strength is in the Schwab US Large Cap, the Schwab US Mid Cap, the iShares Micro Cap, all very much US based in this case, as you can see, and this is where all the real strength is. And again, shouldn't be too much of a surprise. Most of these have been green for weeks, if not months at this point, and it's very heavily centered, for now anyway, on US across various asset classes. Now, what about sectors? The same thing works here. We can see the health sector is very strong, consumer discretionary is strong, real estate is strong, and technology is strong. These are 4 very solid areas, and again, if you're interested, you've got symbols right here, XLK, XLY, XLV. These are very popular ETFs. These are actually spiders. Going into industries, what's strong on the industries? Lots of strength, right? From biotech to pharma, home builders, medical devices, REITs, solar. But again, this is a lot, quite a bit of slant towards what's happening in the U.S. markets. In fact, we don't get into real weakness until, look at the bottom. Oil, right? Metals and mining. Steel, oil and gas, gold, coal, a lot of commodities. Gaming in this case, gold again. This is where all the negativity is right now. So this is really should be telling you where you should have your investments in the ETF world. Fixed income, we cover that as well. I won't go into a lot of details here because that's obviously available to you. I don't think it should come as any surprise. Look how poor commodities are right now. They're all ranked in the 4th and 5th quintile. That's the 2 lowest that we have. They're almost all red, not even neutral, and you name it, whether it's gold, silver, copper, livestock, etc. This is just not the place to be. You can certainly always argue, well, shouldn't you be buying when ETFs are down. But the problem is you can get caught in such a long-term trend on one of these that you don't know if it could be down for weeks or months. So we want to see all these ratings start to turn around before we have any consideration to get in. So while we'll never be at the bottom, what I can tell you with the ETF Investing Advisor is we're not going to go ahead and ride something down for months on end. Currencies, where is their strength? Will it surprise you? Probably not. The US dollar. After that, it really weakens to somewhat to very substantial. Australia, Canada, Swedish krona, euro, all weak. Definitely not a place that we want to be. Any of those ETFs would not be a good idea to be holding those. And then final category is alternative investments. And you might be surprised to see oil here, but that's because this is a short fund. So we also do track some short ETFs, which is kind of neat because you can hold those in a retirement account, for example, but actually have exposure to the short side. In a retirement account, typically you can only hold a position long, but this gives you the opportunity to be a buyer but actually hold short. So this has been in this for months now. We've seen this one. And then the REIT, as you can see as well. REITs are depressed right now. A lot of it is because so much of the capital has gone towards growth opportunities. This will definitely be something that will come around. But you can see in this case, this REIT is actually performing very solidly. So that's not always the case. We looked further up above in an allocation class and one was actually negative. But this is actually a real performer. After that, it really falls off again in alternative investments because that's right now, March 2015, it's just not where the opportunities are. So again, if you go back to where your sea of green is, you can see specific industries are very hot right now, and you can also see specific sectors are very hot right now. There's quite a bit of opportunities there. And then, of course, in certain broader indices, when we're talking about styles such as micro, small, large cap, and we focus on a lot of really low cost ETFs as well. So I'm going to wrap this up for this week. I hope you found that really interesting. When there's a world of thousands of ETFs out there, it can be really difficult to know where you should have exposure, where you should be getting out, and where you should stay sidelined. And very, very visually, very, very fast, literally, you get all this analysis done for you. Most of the ETFs it'll show you should not be involved in, but there's some definite, really clear winners. We update this on a weekly basis, so you don't have to worry about something updating every day or day trading or anything like that. It's just once a week. And the ratings don't change super frequently either. They're not going to go from all green to all red within a week. So this is something you can kind of just check on your leisure once a week and really stay on top of the ETF. So hope that weekly update was informative for you, and we'll be back again next week. Thank you.